When we trade, we are following trends and catching reversals. But at the end of the day, all price action can be derived from volume from buyers and sellers. By analyzing this underlying data, we can gain deeper insights into why the market does what it does, and therefore we can be one step ahead of any price action. Let's take a look at our top 3 volume indicators for free on TradingView. First up, we have the liquidity zones, showing you exactly in the market where people are likely to be liquidated, along with key volume metrics, allowing you to predict cascades or market reversals. Upon loading the indicator, you will notice the green and red liquidation zones. They're really simple to use. Each zone shows potential liquidation zones relative to pivots in the market. Areas of lower leverage, e.g. 10x, are more commonly used by traders and will generally have more volume. Therefore, this zone is more likely than our 100x zone to see a reversal and mass liquidations. So how could we use this for an entry? Let's say we want to enter a short position and we want a reasonable set of entries. We can set them here in the red box at the 25x and the 10x level, as we know liquidations could occur here. So using these zones as potential reversal points can be massively powerful. But we can also get an insight into buying and selling pressure. We can see who is more in control of the market. For example, here the sellers have a higher volume and therefore longs are more likely to be liquidated. The other way of looking at these zones is instead of being support and resistances, they can act as boost zones. When price enters these zones, it can get a boost in this direction. This is due to cascading liquidation logic. Here we see all these liquidated grey zones, and then after these zones were filled, the price continues upwards. This is actually more likely to be the case than seeing prices bounce. For traders that enjoy a deeper level of data analysis, they can open up the settings and enable the heat map mode. In the heat map mode, the indicator visualizes potential liquidity areas where orders and stop losses might be clustered. This map highlights zones that are more likely to experience liquidations based on leverage ratios. Next up, the volume positive and negative levels by Chart Prime, showing you those powerful levels in the market experiencing high volume. This indicator is designed to track the large volume at each level in the market and plot that area as a buy or sell level on your chart. Let's take a deeper look at this indicator and how it works and how you can use it right now in your trading. Firstly, let's take a look at the bars themselves and what they can tell us. When one of these bars crosses the threshold line, a plus or minus sign is plotted on the right side. This threshold level is between 0 and 100 and can be modified in the indicator settings. A higher value of 80, for example, will only scan for really high volume moves, and a lower value of, let's say, 50 will scan for more regular market moves. If a plus sign is shown, this means there were more buyers in this area of the market, whereas a negative sign would suggest there are more sellers. When compared to a regular volume profile, this indicator gives a deeper insight into the market activity at each level. Once a high volume zone is detected, a support or resistance level is plotted, giving you areas in the market to place buy and sell orders based on volume. Let's take a look at some examples and how you can get the most out of this indicator. Here, we see there were some large buy orders previously in the market. We know this because this level is yellow and there is a yellow plus sign. This means there is a higher likelihood of the price bouncing at this level. Let's set our buy order here and see what happens. We see our price comes down and bounces cleanly off the level we marked out. We would have entered a long position and we would have made some serious gains. Finally, we have the spiral levels indicator, showing you areas in the market that are seeing high volume, allowing you to pinpoint those entries and exits. This indicator focuses on market liquidity while making accommodations for price volatility. Let's take a look at how this indicator works. Spirals are plotted at high volume areas of the market. These will be the pivots in the market where price previously changed direction. Lower volume pivots will have small dots, noting them down as minor levels. When a high volume area is detected, a spiral will form with a support or resistance level forming the tail. Purple levels are where there was more selling volume, and green spirals are where there was more buying volume. This spiraling allows support or resistance levels to be suitably deviated from the exact pivot, meaning it could be less likely to be stopped out. Whales in the market can often try and take out stop loss levels looking at key pivots, which this indicator could help you avoid. This indicator also shows how strong each level is. A weak level is more transparent and a stronger one is a more vibrant color, with labels giving the exact values to set your entries or exits. Let's take a look at some examples and why this indicator is so powerful. Here we see the prices in a downtrend. We can see a spiral was formed and its respective support level was identified. The price comes down and cleanly touches this level. Many other traders would have entered at a higher price around the pivot level, but we got a better entry. The price then rallied and we made more gains that most other traders around us would not have made. Trading with volume is one of the most popular approaches to entering and exiting the market. It underpins price action and can give unique insights. So, if you enjoyed this video and want to see more content like this, don't forget to subscribe and join our Discord.